Hi, everyone. Thanks for taking the time to attend. I'm Ash. I work on campaigns at Virtual. I'm also joined here by Alan from Virtual, who's a co-founder. We're here with Zaki and Mo from QPay. I'm personally super excited about the QPay campaign, not only because you guys are addressing a fundamental problem for people within my age category, but also more importantly about how excited we've been working with the two of you personally over the past month or so. For everyone that's attending, feel welcome to ask any questions you have about QPay or their campaign using the Q&A function below. We've already got a few questions from people via email. So in terms of structure, I'll get through some FAQs for the first 10 to 15 minutes before we jump into Q&As and answer questions from the audience. So Zaki, Mo, let's kick this off with, for everybody's benefit. We'd love to hear a bit more about what exactly QPay does and why you got started with the company.
Yeah, good question. Thanks for the intro, Ash. So my name is Zach. This is my co-founder, Mo. So QPay started back in 2006 or 17, sorry. And I guess the best way to describe it is to talk about the different stakeholders that we work with, which is a bit atypical, but it all makes sense when you bring it all together. So we work with universities and university students as a broad headline. Basically, we work with 4 key stakeholders on a campus. So you have universities, clubs and societies, merchants, so things like coffee, beverage, etc., and then the students themselves, of course. So at the top level, you have the university, and QPay helps them with a range of functions, so things like student elections, club affiliations, and grant applications, so mental health, etc., for things on campus. Then you kind of take a step down, and you have clubs and societies. So imagine the law society on a campus, the biology, or maybe if you're a Kanye West fan, the Kanye West Appreciation Club. On average, every campus has around 100 to 200 clubs on campus, but we work with a number of those in different ways. Basically, you have event ticketing, so they run their events through QPay. They have merchandise, so imagine hoodies and beanies and t-shirts and that kind of thing. And then lastly, we have memberships. So imagine you're an engineering student, you sign up to the engineering club. Typically, it's anywhere from $20 to $50 a year. You pay for that through QPay. And that leads us to the third segment, which is around merchants and students. Basically, when a student signs up and pays for a membership, they do that in large part to get access to discounts on and around campus. So, imagine you get like a little sticker on your card, you flash it at the point of sale and you get, say 10 cents of coffee or a free drink with a meal. In 2019, we distributed instead a MasterCard, which functions as a MasterCard cashback system. So people put funds onto the card, and as part of their membership, they get access to this card and access to a range of deals in the same capacity. So you still get something like a free drink with a meal or 10 cents of coffee. But the way it works is that instead of flashing it at the point of sale, you pay for things the way you normally do, and you get it in the form of cashback. And then lastly, like I mentioned, we work with merchants as well. Merchants who upload deals on an ongoing basis to various places on and around campus.
So I guess to summarize that, we're a campus engagement platform. So like Zach mentioned, we provide a range of services on campus at the university level, at the clubs and societies level, and at the student level as well. So the QPay card is the last component, where we think is probably the I guess the segment of the business which will provide us a big return on the overall business. So we make revenue from the different stakeholders, but with the card thing, because we're getting in at the ground floor. So typically a student makes their first, I guess, serious financial decision when they're at university. So, getting their home first job is probably right outside of university as well. So getting their first superannuation account, maybe an insurance provider, and even the first home loan product as well. So we think we're best placed to provide this value to students at the university level. And like Zach mentioned, at the first touch point, it would be at the cashback level. But then obviously after they graduate, you would introduce them to the other financial services as well.
That is absolutely fantastic. Thanks so much for giving us that overview. I've got another question around the range of services that you guys offer at QPay. So obviously you offer quite a lot of products and services, and you appear to have different competitors across each of these service levels. So how do you set yourself apart from this competition, and how exactly do you go ahead and acquire your customers?
Yeah, this is a good question, Ashwin. So at each, I guess, business sector, we do have different competitors. So at the university level, you might have a competitor like Salesforce or Microsoft. At the club level, you might have different ticketing platforms or membership platforms like Eventbrite or Join IT. And at the student level, which is the card, you could say Cash Rewards and probably PocketPal. But in a sense, we actually do a lot more than that. We're just not a Cash Rewards cashback program. That's just one of the products we offer for students to get started on their savings journey. But I guess our value is how we actually connect those products together on campus. So for example, if you're a competitor like Eventbrite and a club wants to use them for their ticketing platform, one of the questions would be, okay, if we do use Eventbrite to issue tickets, is there any way we can issue memberships to our students as well? And the answer is no. So typically where we provide function to club and society, it's quite multiple kind of verticals that we have within each product sector, and all of those products intertwine and report to each different stakeholder on a campus level. So another example is at the union level. So all these clubs and societies, like Zach mentioned, when there's about 200 clubs on campus using a platform, the union mandates all these clubs and societies to report to them on a compliance level, how much revenue they generate, how many tickets they've sold. So if all clubs are using different platforms such as Eventbrite or Try Booking, many of those platforms don't have those reporting tool features that report at the union level. So QPay kind of facilitates all of those functions in a campus level at the union, at the club, and at the student level as well.
It's probably a good segue into, I guess, maybe the core thesis we have at QPay. And I know it sounds very vague or fluffy, but it's true. Our core thesis is around delivering convenience. And it sounds very simple, but the reality is it's often the pointy end of the stick. To be able to deliver convenience, you really need a lot of weight that goes in behind it. And what we found is the best way to deliver convenience is a way that's passive, usually on the way to doing something else. So Mo mentioned, for example, the compliance for running events on campus with the university. As a process to make that convenient, you have to be able to deliver the tool that runs the event. You have to collect all the data in a way, and then you have to report it in a way that's automated and simple. So with QPay, for example, when they run an event, we generate a report for the university automatically with things like emergency contacts, the number of people attending, the location, the details of all the attendees, and all of that information, again, can be done in each individual vertical. But the benefit or the convenience of QPay is the fact that all the services come together. With the QPay MasterCard, again, the same concept, really. You buy this membership, and this is something that exists well beyond QPay. But when you attend a university, around 25 to 50% of students will become a member of a club, at least when they're kind of in their university years. And that's a process that existed before QPay. What we've done is we've kind of sat on the back of that and distributed, I guess, a MasterCard product in doing that. And part of the difficulty in getting a bank account is in that sign-up process. I mean, there was a stat we had in the draft, but 50% of people in Australia get a divorce, and less than that change bank accounts in their lifetime. And when you think about what that means, it's really kind of decisions that are driven by, it's apathy, it's difficulty. And so really, again, when you come back to this thesis of convenience and being able to deliver it in a way where it's very pointed, I think what QPay's done well is we've leveraged all these services in a very specific demographic to make sure that, I guess, each stakeholder has that convenience.
That is absolutely fantastic. I'm going to urge everybody to keep giving you questions in. We've got quite a few questions from people, but now is the most exciting part of the Q&A section, which is my favorite topic around the Shark Tank video that we watched. So if for those of you that haven't actually watched QPay on Shark Tank yet, I highly recommend the video. It's absolutely fantastic and helps you understand QPay and the team really well and what their value propositions exactly are. And that leads to our next question, which is around your raises that you've done before. So you've raised previously on Shark Tank and you've got the likes of Blackbird on your cap table. Why then are you going crowdfunding route and raising through virtual? And what are you going to do with the funds that you raise?
Yeah, that's a really good question. So, I mean, at the end of the day, we feel like QPays is, we have over 500,000, users on the platform. In Australia alone, we onboard over 200,000 every year. So I guess the thing that's really interesting about QPay is, I guess, the ability for us to expand on different campuses. And on top of that, to be able, I guess, to leverage some of that towards QPay's benefit. And so we find a lot of our users are ambassadors on campus. So for example, they get a free boost. It feels great. It's an awesome experience. It's very simple to kind of get it. There's no catch. It happens almost instantly. And what we find very quickly is that they'll tell all their friends about, hey, there's this card that I got. You should sign up to this club so you get access to the same deal. So we thought, is there a way we can leverage that on a broader scale, but in a way where there's still that same buy-in. So crowdfunding was particularly interesting to us because obviously people who do sign up become ambassadors. Either they've graduated and they might tell people who, maybe younger siblings or children even, about QPay, and they go on to promote it on campus. But I think the other side of it as well is that, working in I guess, a financial space, I think one thing that I've learned a lot is that there's a lot of stuff you can learn from everyday people. At the end of the day, you can look at the data, and I'm a software engineer with a data background. and talking to people and investors in particular. That is an invest and buy-in that you don't necessarily get if you're just a customer. So it's kind of that extra bit of feedback that I think is really important. So I think those two reasons are kind of why we looked at crowdfunding, and Virtual's been really successful. So we picked Virtual obviously because of the scope that you guys had.
Oh, that's fantastic, guys. Zach, I know that you've built businesses previously and you've had really good success with them. And Mo, you come from a really good background with the likes of IBM that you've worked at. So talk to us a bit more about why you think each of you guys and your backgrounds makes you uniquely qualified to actually succeed in a fairly competitive market.
Yeah, so I think Zach is definitely the developing side of things. So he's I would say a gun coder. Everything's full stack and built in house. So in terms of the tech side, we're super strong. But I think equally from my side, I'm purely financial. So like you mentioned, Ashwin, I worked at IBM, a little bit of tech consulting background, working with government clients on information systems, but also at Deloitte, working in insolvency. And that's all about lean capital management. How do we get companies to actually operate with, the least amount of expenses and maximum amount of cash flow that's going to the relative segments of the business. So in Cuba as history as well, we've made it quite frugal. So we've made sure that we only spend on stuff that we require. And again, protecting investors' funds as well. So, not making those moonshot kind of expenses that, American companies do in the US where they burn all the cash in, 4 months and have nothing to show for it. So we've been quite frugal in that perspective. But I think the mix of me and Zach in terms of a tech background, a financial background, it's got us here so far. And I guess one of the major milestones we reached in 2019 was hitting that $1 million milestone. I don't think it could have been possible with just a pure tech background or just a pure financial background.
This is more of a personal angle as well, but again, in terms of why QPay. So, I mean, I've been in startups since university. In fact, in my last year of university is where I started. And like you said, I had a business that I exited that was an app development business. And on the one hand, I mean, for a university student at the time, we were making so much money. It was great, compared to working at McDonald's. But at the same time, there's a cap, and we saw it. We got to 7 staff at one point, but it felt like, at the end of the day, selling your time for money wasn't something that, scaled in a way, you can kind of imagine what the ceiling looked like. And so, especially because we built apps, we saw, I think the biggest app we built was for Adidas, but, you saw the scale of these apps, you saw what they could do, and you were the guys, who built it. And so it kind of inspired us to kind of think, if we could do that for ourselves, A, but then B, if we could, I guess the guiding metric was, could we make money while we sleep? And if you could do that, then you're in a business, I guess that you can't really imagine what the ceiling looks like. So this is more of a personal thing, I guess, but I guess the reason why we started QPay in part was because of, I guess, that opportunity. We felt that, if we could build a business with, unlimited scale and unlimited, I guess that ambition, that's kind of what drives us and what makes us QPay, I guess. Yeah.
Yep. And I guess we identified the problem early on in terms of just from a QPay perspective. So both Zach and I were presidents of societies and clubs. So we kind of firsthand knew, and we kind of clicked to say, yep, we face the same problems when we were in university doing manual processes, and how QPay can actually help the campus ecosystem. So it's kind of a shared vision when we first met. And I guess it's kind of grown up to this point.
That's absolutely fantastic. I've been a student both in the US and in Australia, and I completely understand what you guys are talking about and the problems that you guys are presenting, because those are real problems that I face continuously, say, over the past 5 to 6 years as well. Mm-hmm. So for my final question to you guys, so QPay is now got 100,000 users, present over 100 campuses across 4 countries. So what's the next big goal and what's next for QPay?
Yeah, good question. I guess well, what's been interesting is, I mean, so probably tangential but related. COVID obviously was a pretty difficult thing for a lot of people, particularly for universities. So for, I'd say, the first half of 2020, we definitely took a hit. Universities globally kind of shut down. At the time, we were only in Australia and the UK. But what was interesting was that towards the end of the year, so universities around the world all went online. But what they did was they moved all of their, we call them core services. So things like lectures, exams, tutorials. So the things that make a university kind of, I guess, functional to some degree. They took those all online. But what they didn't do was move supporting services online. And so all these people were complaining because they were paying the same tuition fees as if they were going on campus. And in part, people pay such a premium for university because of the experience, going on campus, meeting friends, making friends, joining clubs, all those kind of tangential activities just really disappeared. but people were still paying the same amounts. And then not only that, but then you also had a lot of supporting services that also disappeared that were really important. So things like mental health, particularly in COVID, financial assistance. And those application processes were all manual. So what happened was when COVID kind of hit, they still mandated that someone, for example, studying internationally would mail in, for example, a grant application saying, hey, I need an extension for, my grades because I'm going through difficult times. And again, that whole process was very, I think everyone went through that in kind of an upshift. But towards the end of the year, basically what universities started doing was shifting a lot of these supporting services to be online as well. And that's where kind of Salesforce and Microsoft, as Mo mentioned earlier, started coming in. And the reality is we were able to get, 11 tenders really within the last 4 or 5 months, and we expanded to New Zealand and Canada, all on the back of this kind of really massive kind of push globally. And we're finding that probably within the next year or two, we think that there's going to be a massive consolidation. These universities before used to be pretty fragmented, but it worked. With COVID, it really kind of broke the system in a lot of other industries in a way where it kind of had to be forced to look at kind of how they ran things. And so it's a kind of a double-edged sword. On the one side, we think that the opportunity is that we can grow, for example, to countries like Canada, New Zealand, all of Asia, Southeast Asia, broader Europe, and obviously the US pretty quickly on the back of kind of these top-level contracts. But on the flip side, we also feel like there's going to be a consolidation, for 2 or 3 main players. And our goal and our intention really is to be one of them. We think we have every opportunity to do it. We're growing pretty quickly. But I guess to answer your question directly, we want to be on every campus in Australia. Certainly, we already are in some degree, but we want to kind of have that density. We want to be on every Commonwealth country within the next year and a half. And US is probably a part of that, even though it's not strictly a Commonwealth. And then we kind of want to have all those services rolled out in a full capacity everywhere we are within the next 2 to 3 years, with an ideal looking IPO at some point beyond that. But, it's obviously an evolving journey. I won't lie and say that we know exactly where we'll end up. But on the flip side, we're pretty bullish about how things look.
That's amazing. That's all the questions for me. So I'd love to move on to the Q&A section. We've actually got quite a few questions from people about global expansion. So a question from Joshua and Banji both regarding your global expansion strategy. When you sort of aim to break into American university market, how are you going to do it, especially given all the competition there?
Yep. So like Zach mentioned, our short-term goal for the next year and a half and probably 2 years is the Commonwealth countries. So Canada, New Zealand, UK, Australia. And it's a big enough market there to, warrant the expansion there for the short term. But then obviously US, it's definitely the end market that we want to approach. In terms of competition, what we've seen, it's pretty similar to Australia and Canada in terms of there's competitors in each different service line, but there's no competitor that provides the range of services that QPay does. So like I mentioned, at the union level, providing services to the clubs, at the clubs level, providing services to students, and then obviously the rewards card, which students get, which eventuates into a banking product later down the line. So I would say, even though the US market is obviously a bigger market and there would be more competitors, it's pretty much the same strategy. Going out to these clients as a go-to-market strategy, it's going to be the same process. We provide value to your complete campus, not just one of your stakeholders in the campus. And that way it becomes a lot easier sell for us to say, we've got the value for all of your campus stakeholders and not just 1 or 2.
I guess, I mentioned this, there's been a couple of emails and I think Facebook side as well. Obviously we aspire to be as big as these guys are, but if you look at the most successful companies in the world, I think that the common denominator is their breadth, the scope at which they kind of operate. It's massive. And what's interesting about it is if you try to describe any one of those companies in a single sentence, it's almost impossible. So, what is Google? You might give a vague answer like it's search, but is it really? You have Android, you have YouTube. So there's a whole host of kind of little pieces that they do. But the value in them, what's interesting is that all the services work together to basically to compete against. And so for us to answer the question about how we'll go to the US, our value add is that, we offer basically the whole suite of services. As a company, for example, we use Google almost entirely for everything from meetings, obviously, event calendars, email, obviously search. We use Android for distributing devices. So all of these kind of services come together and it becomes, as a business, compelling to sign up because, it's kind of a one-stop shop. All the pieces work together. You don't have to manage integration pieces and it becomes an easy sell as well. Especially when you talk about it in the way from a software perspective, it's a monthly fee or it's an annual fee. So it's easy to digest and it's kind of a low risk proposition. And what we're competing against, if you are going to talk about kind of the top level, it's bespoke systems. So that's why I mentioned Salesforce and Microsoft. It's either you kind of build all of it yourself, which is a daunting proposition and expensive, or you use QPay. And I mean, to benefit of QPay, and especially if we do expand to the US, we have over 3,000 clubs using QPay. We have 11 top-down contracts, and this is all within the last 6 months. We have over 500,000 students. We onboard, hundreds of thousands every year. So from a university perspective, and certainly from a risk perspective, if we've done it before for other universities, no matter kind of where you are, it still has that same weight. So we think we're going to be able to leverage all the growth that we have in Commonwealth countries to kind of really hit it hard in the US. And then the other part of it, like Mo said, is really just relying on that kind of, I guess, ecosystem to take us across, even if there are competitors within each piece of that.
Absolutely fantastic. So we've got another question from Vivek regarding what happens to your customer base, which is primarily students after they graduate.
Yeah, this is a favorite of mine. So I mean, look, I think our area of expertise and our focus is absolutely on students. We call the QPay card a multiplier, and I think Mo said the same before. We call it a multiplier because it has the potential to multiply everything we're doing currently, 5, 10x. At the moment, it's a black hole. They graduate and we really never talk to them again, other than maybe if they're investing. But on the flip side, what we're thinking with the MasterCard, we're now setting up partnerships. Because I mean, at the end of the day, we know what students are like. We know kind of the value add that we have specifically for that demographic, but we're not necessarily experts kind of past that. So for example, we partnered up with a bank here in Australia. So we're distributing a white labeled product, a QPay card. But once they graduate, they become a customer of that bank. So they'll be able to service that customer at that point in time for that person's needs. So for example, when like Mo mentioned, they get their first home loan, their first car loan, their first actual paying real job, not maybe McDonald's salary. And you kind of talk about the different stages of that. For example, we are also talking to a superannuation company. The same thing again. They can offer maybe a specific one for students, but when they graduate, having a better product offering for when they graduate. And so the premise really for us is not necessarily to branch out directly when they graduate, but more facilitate partnerships so that there's a smoother handoff. And so obviously, and I think to Ash's point, when we first started, our intent at the end of the day is to help people save money to become better at managing their finances. So setting up those partners is also a strategic thing for us, making sure that we don't just disappear, but we still continue to provide that convenience in a way that generates us revenue, obviously, past their graduation.
Yeah. And so just on that point as well, so even though we do lose users when they graduate, we also onboard more every single year because you get new students enrolling into university. So like Zach mentioned, we want to focus on, I guess, the LTV of a typical student between 2 to 5 years, depending if they're doing a single and double degree, and then handing it that partnership to that bank. But obviously the bank or the financial services provider paying us for that customer.
Absolutely. We have another question from Vivek, actually quite an enthusiastic group today. So as you sort of operate and grow, you're going to be faced with a lot of operational risks and growth and execution risks. What are these risks that you foresee for the business?
Yeah, that's a good question. I mean, this is probably tangential to maybe some other questions, but we have a world-class board. So I mean, I'm one of the directors, Mo's the director, but we also have Andrew Chick. So he used to be the CEO of the Royal Bank of Scotland here in New Zealand and Australia. We also have Charles Carnegie. His family is quite well off in terms of they do a lot of investments. And then we also have Blackbird, as you mentioned early on, Ash. And we also have Steve Baxter and Naomi Simpson, who invested as well as part of the Shark Tank thing. So basically with a lot of these people, we leverage kind of their experience. Mm-hmm. I mean, so Andrew Chick particularly has been, great. We're working with a financial product. And even though we don't have the same compliance and kind of capital requirements that an actual bank has, it was a big kind of learning curve for us. How do you actually make sure that you work in a secure fashion and make sure that you work in a highly regulated environment? So I guess that puts us in a frame of mind for de-risking things. And then Mo's point earlier as well, he's obviously worked with companies who were struggling in Deloitte and had to kind of work in a cash effective way. And I guess that goes hand in hand with how do you grow a team? Because if you do it poorly, you throw a lot of cash at it, you burn all that money and then you don't have much to show for it. I think we've been pretty frugal from day zero, and I think that's not going to change. It's not kind of who we are as a company. So from a risk perspective, between the fact that we have a lot of people with grayer hair, or at least hair anyways, than us, and obviously I guess a culture that's pretty safe, for lack of a better word, we're pretty confident that we can meet that challenge.
And just on that point as well, so with the current investors that we have from Naomi Simpson, Steve Baxter, Blackbird, and Artesian, these guys have obviously invested in a lot of startups, so they've got a massive breadth of experience with all the startups they've invested, and they've got startups at different life cycles. So pre-revenue stage, revenue stage, growth stage, Series A, even IPO stage. So the wealth of experience and I guess advice that we get from them, it's been quite beneficial. And we have no doubt that as we scale, we're just going to take feedback and the learnings from them to apply the same things to us.
Absolutely, that makes perfect sense, guys. So we've got a question from Nick here regarding the QPay offering, the product offering. Can international students and their parents send money to their kids from overseas through QPay?
It's a great question. Actually, at the moment, no, but we are setting up a partnership with, I can't say yet, but we're setting up a partnership with, what do we call them? International money transfer.
I guess
I
we
don't
call them
know.
that.
The point is, so what these guys do is they basically handle international money transfers. And what's really cool about that is that we want to leverage it, again, as one of the services that necessarily we don't want to build out, but take advantage of. Because I think, especially with a lot of international students, we find it's a pretty daunting experience. And I mean, you probably dealt with it, Ash, coming from the US, but it's a pretty daunting experience. You come to this new place, you've never been there before. And this is a global phenomenon, not specific to Australia, but you have to set up, basic things like a phone, setting up a bank account, obviously getting a place to live, just knowing where do you buy food. And then, you have more complicated ones. Like you said, how do I transfer money if, I have one currency to another? And you have to do all of that in a way where it's efficient because it's usually pretty expensive. And you have to do it in a way where it's, pretty timely as well as to be quick. And you kind of have to really kind of hit the ground running. So I think part of our strategy in terms of certainly the QPay card is that cohort. I think there's a lot of things we can do to help. And indeed, one of those is in international money transfers. But currently, no, every card only has a BSP account number, but it is very much on our to-do list.
That's fantastic. We've got actually quite a few questions around COVID. I know we spoke about this in a bit of detail before, but there's questions from Hans and Banji talking about, how COVID's caused a smaller number of people to be actually on campus. So people and students on campus are going to drop drastically over the year and probably over the next foreseeable future. So what are your sort of plans to tackle this, and what are technologies or things that you're building to de-risk this going forward, and innovations that you're sort of embarking on?
Yeah, so like we mentioned before, and I think Zach mentioned as well, these online services where they've shifted from manual to online, they're not going to disappear. So for example, a club to operate on campus, they need to go through the same, club affiliation process. To apply for grants, have to go through a grant process, insurance processes. So those services are not going to disappear. In terms of students coming on campus, there might be some shift towards going from physical events to online events. So we see a lot of our customers doing Netflix Zoom parties for all their members. So, and I guess one of the points Zach said is, a student usually joins university to see what the actual social aspect of the campus is. And there's actually been quite some studies done where the better the social aspect of the campus, the higher the graduation rate. And it's all has to deal with the engagement rate of a student. If a student is more engaged on campus, they're more likely to graduate. So universities will keep investing in those processes. And then obviously after COVID, with the vaccines that we're seeing around the world and even in Australia, we're already seeing students come back on campus. And we hope to, obviously continue that in the future as well.
But I mean, the good thing is that, I don't think it could be as bad as it was last year.
Yeah.
Certainly, and I say this not from a COVID perspective, but more from universities were really caught flat-footed globally. It was almost like a surprise. And I know this applies really to every industry, but we saw what the impact was at its worst case. And that was more that they didn't even have a process, for example, to handle lectures online. So moving forward, like Mo said, we expect that for at least a year or two, it's going to be a combination of a digital and physical presence. But then, like Mo also mentioned, as long as you have campuses and as long as you have universities, there'll be a strong social component to it. If you think about it, people pick campuses on, based on where they think they're going to have the best experience. Obviously, the prospects when they graduate is really important, but universities have a commercial directive to make sure that their campus is as engaging as possible. People who graduate, and obviously alumni who donate, and then like Mo mentioned, mental health, people graduating, better grades, less likely to drop out. So all of these kind of things come together, and I think QPay is in that sweet spot because we handle a lot of different stakeholders in a bunch of different ways. We talk about the QPay card. What's been really interesting about one of the uptakes we've seen with merchants is moving to the QPay card because they can't do a flash and save anymore. So if you're a store, for example, that sells clothing, and we've seen the products, for example, we have ASOS as one of our merchants. If you are a store and you had a physical presence, how do you have a student discount if you were reliant on a flash and save system? You can't. So when you look at the QPay MasterCard as an alternative, it's actually more digital, it's friendlier, there's a bunch of other ancillary benefits. So we expect that, again, we hope to be kind of in that sweet spot where it's digital, we fit, and we think we can accelerate it. And where it's not, it's still beneficial to kind of use QPay in the capacity it would have been valid, before COVID. And I think as long as we kind of straddle that line well, I think that's kind of, I guess, the answer to what we think it'll be like in the next year or two.
Absolutely. That's absolutely fantastic. We've got a question also from Sam, who is a final year university student hoping to become an investor in QPay, and he wants to know how he can be more involved in sort of helping QPay achieve its next big goal.
Yeah, so we do have an ambassador program that we run year to year. That's obviously students who want to actually get involved in the startup ecosystem as well. So how is QPay started, how they can actually get started in their own startup journey as well. And equally, as Zach mentioned previously, called being ambassadors of QPay. So, better systems for the clubs, better system for unions as well. And actually some of the introductions that we got to the universities is through students, club presidents who've been using the platform. So yeah, we definitely do have an ambassador program. So, happy for Sam to reach out to us, and we'd love to, have a chat to him.
That'd be great. I mean, for what it's worth, the ambassadors, we have a lot of fun with every year. We run different campaigns. We got into a bit of trouble at ANU for having a blimp that was probably not allowed. In hindsight, though, one of the ambassadors had an idea about. So, I mean, look, at the end of the day, I meant what I said when, we first started talking about why virtual and why crowdfunding. I mean, we love seeing that, people, A, tell us what they think about QPay, but B, telling other people, their positive experience. So, if you're an investor in the company, that only I can imagine, is a bit stronger. So certainly, why you love QPay, I'd love to hear about. And like Mo mentioned, if you're, part of the ambassador program, make it a bit more formal as well.
Absolutely. We've got a couple of questions along similar lines where, say, for example, students that don't study at universities offering QPay, is there an opportunity for them to currently use any of the QPay products, or is there a potential that you would expand into those lines in the future?
We get a lot of questions around that, and it's a bit of a mixed bag. On the one hand, I don't want to say that we don't want to help people who are students. I mean, obviously, I'd love to do that for everyone. But I think what we do well and what we do best is focusing on the student demographic. I mean, a lot of the stuff, and I mean, I'm a software engineer by background, a lot of the machine learning stuff that we do, a lot of even the natural language processing that we do, it's based on identifying things in kind of that domain. And so that value is kind of almost not lost, but it's not really as strong when you're not kind of in that ecosystem. I mentioned kind of obviously people leaving university and how we might be able to help them. We have talked to a couple of people. For example, year 13 is a pretty big thing in Australia. So people maybe before they start university that we've started looking into. But kind of realistically, I think kind of our sweet spot and certainly what we do well is kind of very much within that university domain. But obviously, you're more than welcome to give it a crack, and if it helps, more than happy to kind of have you on board.
That is amazing. That's all the questions we've got from people that have attended the webinar today. But after meeting the two of you, it was an absolute no-brainer for Virtual that your campaign would do really well. But for everybody else's benefit, I'd love to tell them that QPay's campaign's taking really good shape, and you've already got around 1,300 EOIs that have expressed interest that far in the campaign to make an investment. So I'd love for you guys to talk a little bit about your campaign, when your campaign starts, and how investors can get involved from now on.
Yep. So our campaign is going live tomorrow. I think it's 10 a.m. Ashwin, just to confirm, Australian Eastern Standard Time. So if potential investors who are interested in QPay can visit the virtual website and they can commit their interest there. And then seeing how we actually go with collecting the funds through the private offer round. We might close early, might close late. And then the live offer round will go out to the general public. But we hope to, with all this interest that we're getting, we hope to close the round pretty quickly. But that's how investors can get involved. If investors have any other questions that they would like to ask us, they can reach us at investments@quicklypay.it. And Zach and I can definitely answer any of the questions that they might have.
I think you can also message through the virtual platform as well.
Yeah, that is absolutely fantastic. So for those of you that came in towards the end of the webinar, we'll send through a link where you can rewatch the entire thing. And also, if you've got any questions, feel welcome to email the guys, or also email us support@virtual.com, and we'll connect you with the team at QPay. Thanks everybody for coming, and thank you so much, Zachariah and Mo, for the wonderful presentation and your responses. Absolutely loved hosting today.
No worries. Thanks a lot, everyone.
Guys.